Very good morning to one and all present here. On behalf of the Manonmaniam Sundaranar University and the Internal Auditing and Assurance Standards Board, the Institute of Cost Accountants of India, we welcome you to the fourth day professional development program on the Internal Auditing and Assurance Services. Today, we have a wonderful speaker from Hyderabad with vast experience, and he'll be delivering a lecture on internal auditing, the integrated and sustainability reporting. I welcome all the participants, faculty members, students, industry experts for the program. Over to Dr. B. Revati for introduction of the chief guest.
Good morning to one and all. Thank you, Mr. Rakesh, for your welcome address. The resource person for today's section is CMA Murthy. He, after his BCom graduation, has become the fellow member of ICAI and also the fellow member of ICAI CMA. He is practicing as a chartered accountant since 1983. At present, he is the Central Council member of ICAI. He is in charge of the consulting area of the firm. He is also having varied range of experience in conducting various audits. This includes bank audit works, concurrent audits, company audits, internal audits, tax audits, system audits, special audit of various kinds. He is also a qualified cost accountant and he has knowledge in the costing to monitor the preparation of cost sheets, expenditure budget, contribution, profit statement, and other MIS reports. He deals with the corporate law matters, taxation in relation to any general and specific points, the audit of various natures. He has about 33 years of experience in practice and has got rich experience in handling audit works. He was in charge of the audit team for nearly 20 state-owned companies and organizations. He has occupied various positions. Mr. Murthy has served as Secretary and Chairman of the Hyderabad chapter of Cost Accountants in 1996, 97, and 1997 and 98. He has served as Secretary, Vice Chairman, and Chairman of the Southern Indian Regional Council of ICWAI during the year 2002 and 2003. He has served as the chairman of the National Cost Convention of ICWAI held in Chennai during 2002 to 3. He directly took active part in conducting national cost conventions of ICWAI for the last 15 years, being held all over the country. He was the faculty in ICWAI Hyderabad chapter and was also the faculty in ICAI Hyderabad chapter, was a faculty in ICSI Hyderabad chapter. He has served as a guest faculty for many training programs. He is a member of Board of Studies, Commerce Department, Osmania University for the period 2003 to 2005. He has served as a member, Faculty of Commerce, Commerce Department, Osmania University, and still serving as a member of Osmania University Department of Commerce. He is a member of the committee appointed by Andhra Pradesh government to conduct accounting systems for the cooperative societies. At present, he is functioning as a secretary, Hyderabad chapter of Indian Accounting Association. He has acted as a chairman in 33 All India Accounting Conference held in the year 2010 at Trivandrum for one of its sections, and also 37th All India Accounting Conference held in the year 2014 at Lucknow. He is also an active member in Indian Commerce Association. He is the patron of the state of Telangana and National Social Organization. He is the vice president of Lions Club of Hyderabad. As to the other information relevant to the resource person, He has appeared in various TV channels and print media for promotion of commerce education. He has appeared in TV channels on the subject of taxation. He has visited many colleges in the states of Telangana and Andhra Pradesh to promote professional education. He has also authored books on GST, accountancy, accounting standards for BCom, published by Telugu Academy. Welcome you, sir, on behalf of our university and on behalf of your own institute. I welcome you for this collaborative arrangement. Dear participants, we have got an eminent resource person with us. Let us enrich our knowledge with his expertise. And dear participants, some of the participants who have not filled the feedback form of yesterday, I will post the feedback form of yesterday now in the chat box. Kindly submit the feedback form of yesterday immediately. Thank you. Back to the resource person.
మనం నెట్ కనెక్ట్ చేసుకుందాం సరిపోతుందా
ఇప్పుడే మార్చుద్దాం very good one. Can I start?
Yes, the
Yes, sir.
section is
Yes, sir. You
yours.
can start, sir.
Is PPT ready, Mr. Rakesh?
Sir, PPT is ready. It will be shared now. I have already shared it. It will be now displayed in the screen.
Okay. So, ఇది repeat అయింది. So very good morning to all of you. More than thanks for Ravati madam for reading my biodata. More than that, I am your man in the sense all of us belong to Commerce Department, and I am also happy to share with you that I am also doctorate like most of you. It is my passion to become doctorate, and I have become doctorate at the age of 61 years as a part of passion of my life. Now, coming to the first, let me thank my own institute and the college for giving me a chance to be with you to share some of my thoughts on the most happening subject in the country, world, internal audit, and how does internal audit help or facilitate effective and useful integrated and sustainable reporting. I request my colleague in the institute, Shankar, to help me in furtherance of the moving the PPT slides. Next. Shankar? Yeah. Today's agenda is a little bit introduction. I talk about annual reports, CS reports, social CSR, then BRR, IR, SR, the successful story of ITC, and how does internal audit help in achieving all these reports. Next. Business. All over the world, we do business. There is a quotation that in business and war, everything is fair. But we have got a big game with certain rules and regulations. Everybody has to follow those rules and regulations. We have to follow the country's law and regulation. Then only we will be a correct businessman, and every businessman owes to society at large. Dear friends, company law, section 128, talks about prescribes that every company should compulsorily maintain books. They did not give the list of the books, but they have told very clearly a book which showing cash payments. Of course, nowadays it's nothing but bank. A book showing sales, purchase, assets, liabilities. In other words, nothing but these are common sense books of accounts as per the requirement of 128. We have to maintain. Next. Love and affection is reflected through rose flowers or any flowers. Similarly, accounts are reflected. Rather, business should reflect entire thing through its accounts. If I see any statement of accounts, it will let you know what is accounts. Now, the fundamental question is how old is accounting? Dear friends, you will be happy to know that. Next. Ramayana. In Ramayana, when Rama is in Vanavasa, Bharata frequently goes to meet his brother, elder brother. After inquiry of everything, the second question of Rama was, I hope your income is abundant and expenditure is minimum. I hope your treasury does not reach undeserving people. This is a quote, this is written by Nannels Valmiki in Aranyakanda. We talk about now income abundance, more income, less expenditure, minimum expenditure, nothing but cost control or cost reduction. And we always say that the benefit of expense should go to the right person. This is told as good as Ramayana, none else by Valmiki in Aranyavasam of Ramayana. Next, in Mahabharata, Nakula is in charge for sword fighting and also for books of accounts. And Draupadi was in charge for accounts when they were in Vanavasam. Now we will go to all our Vedas. All Vedas directly give reference about accountability, which is nothing but today's accounts or our duty as accountants. Now we come to latest trend Ardhasastra, Kautilya or Chanakya. He wrote Ardhasastra. Ardhasastra means actually not finance, it is about people. Most of much he spoke about only Ardhasastra, finance of the country, and really amazing book. Even today, applicable to today and tomorrow, and for any period it comes, it's applicable. Now, the stakeholders in any business is employees, investors, suppliers, community, government, customers. How to reach them? Next. Friends, how to reach them? To reach them, kindly go back, Mr. Shankar. To reach them, you need not now go to airport. Thanks to Corona, no seaport. Passport is not useful now. Government is discouraging imports. We love export, but no exports. But the only thing to reach is reports. Next, reporting. Reporting, we have got mainly two reporting systems, financial and non-financial. Financial, nothing but annual reports in shortcut. Non-financial, we have CSR reporting, business responsibility reporting, sustainable reporting, and integrated reporting. Next. Now, annual reports. This is the most pet subject of all of us, being dividend, being shareholders, or being researchers, anybody. We love to see every year annual reports. They contain only financial capital of the company. They talk today's figures and last year's figures. The disclosures are as per law. The compliance are as per company law, and this is very short term. It talks about 19 March, for example, 19 March and also 18 March. Suppose you take up the latest balance sheet, it talks about 20 March, and it also talks about 19 March, 2 years. Only its duration is very, very short or a short term. That's all. Thank you. Next. Now, what does any annual report contain? As you are well aware, it contains general corporate information of the company, name and everything, etc. The operating and financial review, a bird's view as well as a detailed review. Then comes director's report. It is duty as per company law that directors should give a report about companies. Section 134 deals with it. Then we talk about corporate governance wherever it is applicable. Then chairman will give his speech about the company's performance and future prospects. And we have auditor's report. This is normally auditor's report is a standard performance of company law. Next comes financial statements. Section 240 deals with this. They contain a balance sheet, P&L account, cash flow, and notes. And of course, all accounting policies what we follow should be compulsory disclosed in the annual report. Other features depending upon the company's nature, they will publish. Next. What is the objective? See, the simple information is they provide information. Any annual report will provide information to all of us. You love to read any reports for the purpose of researching. A management wants for planning, analysis, and decision-making process. Investor will always see the in a lighter manner dividend coupon or dividend details. Of course, nowadays everything is coming only through online. Otherwise, investor is interested in the how to whether his decision is rational or not. Public at large will see different aspects. You are one of the public most important cream of society. You will do research on the basis of annual reports. The next one, economic resources. How to procure claims, utilization of these resources will be dealt in the annual reports. Various stakeholders like GST people, income tax people, other act people, ESI, PF, everybody will see the balance sheet and make their own. One more such agency is a banker who funds them. See, last one is statute writer. He will see that it is conducted smoothly, fairly, complying with all the acts. Now, the advantage of annual reports are many in the line. It ensures consistency of the figures. The figures what we talked about last year, this year, it will be consistent. And for any claims of insurance, suppose recently we had Corona on 31st March, what was the stock available in the company? They will see the annual report. Based on annual report, they will settle the insurance claim. Similarly, the profit or loss or what I disclose in the annual reports will determine the profit or loss or simply the financial performance of the company. Loan means here I am meaning bank or any big loan. Anybody, whoever is funding to the government, they first ask the latest annual reports. Normally, they will ask for 3 years reports. Based on those 3 reports, they will assess the credit worthiness, credit facility physically to the clients or company. Winding up, the most important is the latest balance sheet or latest annual report. It contains much about the information of the company, and based on this, the register companies or other officials will go for the winding up. Tax liability. Normally, the profit or loss disclosed in the company balance sheet is the first basis for tax liability. They will start with as first point and calculate the tax liability. Now, the best part of the annual report, it acts as evidence in anything. In anything, normally we as accountants, as auditors, always insist for evidence. Especially the best evidence is only external evidence. We don't rely on internal evidence at all. We always go for external evidence. The best evidence is the published annual reports, or if not published, at least latest reports certified by the auditors and directors. Goodwill. This is something intangible, not measurable easily, though we talk much about goodwill in the classroom. The balance sheet is taken as a good basis for the good valuation, or nothing but again goodwill. Now, next is fraud detection. As a whistleblower, auditor has to supposed to talk if he suspects any fraud in the reports. So this will act as fraud detection, and many estimates what we make will be always based on the estimates. So this will act as a best guide for the future estimates. Above all, complaints, whether the Indian Companies Act or SEBI or any act, first asks you, are you compliant of all the rules as per company law? So this annual report will act as most compliant in nature, and all companies in the country will be definitely complying with these things. But with all that, it has got its own limitations, good or bad. So first thing is, the figures what we find in any annual report is only historical costs. Suppose I buy a land for 1 lakh, 1 rupee only, academic interest. I will show only 1 lakh, 1 rupee in the balance sheet. I will not show today's value in the balance sheets. The figures in the balance sheets are historical cost. Now, second thing is, most of the items what appear in the balance sheet are dependent on personal judgments. I will just discuss afterwards how it affects the balance sheet. Then comes inflation effects. It will not take any inflation effect. As I told you, everything is only based on the book price or book value, the amount which we have booked in the books. It does not go beyond that. It does not come less than that. Then comes judgment. Judgment and personal judgment can be taken together. We have got several accounting policies in the country. and every auditor has to follow them. Similarly, every company also has to follow them. So we cannot take escape from either way. As an auditor, suppose I am auditor, I would follow all the accounting policies. You are a company, for example. You also should follow the accounting policies. We'll take live best example is depreciation. Normally, in any classroom, you as an academician or as a lecturer will teach student that we have got 8 methods of depreciation, 8 or 9 also. And then when it comes to company law, you talk only 2 policies, WDV as well as the SLM. But when it comes to income tax, you will teach only one, that is SLM. I'm sorry, WDV. See, we start with 8 minutes in the academic classroom. Only 2 are applicable as per company law, but only 1 is applied in the income tax. This is how the things move in the practical world. Next, intangible assets. We will not record any intangible assets. For example, live example is I have got cattle. Cattle has given extra cattle for every 1 year. We will not record the extra cattle in the books of accounts. Similarly, some assets, the value may come down, value may go down. We don't depreciate, we don't affect them into books of accounts. Next, interim reports. Every quarterly, all companies publish interim reports, but the interim reports again nothing but historical cost. Now, the next disadvantage is, limitation is, they are not always comparable across companies. Suppose there are 2 companies in cement industry. I cannot compare one company balance sheet of cement industry with that of one more company of the similar industry. They are very, very not at all comparable because of the capacity, because of the location, because of several non-monetary factors. I cannot compare any balance sheet with any other bank, any other company balance sheet. Now, the one more disadvantage with annual report is they don't talk, or they talk very less about the non-financial factors. Normally, in costing subject or financial subject, we give weightage to the cost factor or financial factor and make a decision. But we always say that at the end of the day, the above decision is subject to non-monetary factors. Now, similarly, they are not available there. Now, the last disadvantage is figures are distorted. I will add, club, reallocate, realign, or declassify. So, suppose I may legally go for reclassification, realignment, readjustment. It is not a hanky-panky thing. It's the most accepted way. I can always say that I can club the expenditure. For example, the company says that don't show certain expenditure less than some expenditure in separate head. So I will add all those expenditure and make them one big figure. Like that, figures are distorted. Next. Now, see, this is the biodata of the candidate. He says, I will write off right, off correct. He will be selected for the annual reports. However, you may not be able to read the theory, but it means you have selected because you. Now, the second one is annual reports. He says that it is lack of clarity. Any annual report, normally for a viewer, for a shareholder, will be a little bit confusing because it has got more numbers. Numbers outnumber the contents. According to me, numbers are more in the report than the non-numbers. Next, who is right? 9 or 6? The original figure is 6, but one says 9, one says as. This means there are some subjects in the company law accounts, not only company, any accounts, where we can draw separate or controversial decisions. Now, opinion. Any balance sheet can be a clean balance sheet. I'm referring to auditor's report. It can be clean, it can be qualified, it can be disqualified, it can be adverse, it can be disclaimer. Clean report means the account represents true and verified. Most important aspect what every company wants. This means that the company is like Rama is goodbye. Rama is goodbye. but there are sometimes adverse reports. We say that the account do not represent true and fair view. The third category is, I will say that the accounts are right, subject to the Coimbatore branch accounts, which I have not audited. Means I am putting a disqualification there. Since I did not verify the accounts of Coimbatore branch, I will say that the accounts are right, true and fair view, but not subject to one qualification. That is, I did not check up the Coimbatore account. It's called disqualified reports. Now, at the end of the day, financial reports take lead because of statutory protection. They take much load because they are very big books you find in the market. Each book sometimes goes beyond 500. Infosys, Wipro, they contain a lot of information about the financials. More is notes, and they are done statutory road. So they are taking right because they are statutory supported and office mode. So in short words, financial reports lead, road, statutory. They take rapid strides, and they are on because they are on office mode. Next question. Now, figures. The sad part with annual reports, not all reports, I should not say like that, but some reports, the figures may not tell us the right question of the company. I hear this says, I know the figures don't lie, but your job is to make them lie. It's nothing but creative accounting. To make a sick company look healthier, I may change some of the figures. To make a healthy company as a sick company, I will change the figures. Sometimes account receivable will become account receivables. This is called creative accounting. Of course, we are not now today dealing with creative accounting. This is only whatever I talk today in this meeting, in this seminar, in this virtual seminar, are purely my own views, not the views of the institute for which I am belonging. This is how creative accounting takes place in the. Now everybody in the country every stakeholder wants beyond numbers, beyond annual reports. Now the slogan everywhere is plus or beyond, audit beyond, classroom beyond, police plus beyond. Means nobody wants the literal duties as per the law. We want something beyond. Such are nothing but sustainability reports. They look beyond the numbers. We want something beyond numbers. The real performance of the company, the social organization, company goes to society. As a part of that, we have got sustainability reports. Next. Now, we talk now today much about the non-financial reports. Normally, we measure, disclose, accountable to what? To the income, to the expenditure, assets and liabilities. But the stakeholders, they want what is the inclusive development of the company, what is the sustainable development of the company. They want to know what is the company's performance in future. How does the company's projections go in future? Company's projections. What are the achievements the company has, and has the company been subjected to any penalty? For example, we have got green tribunal, water tribunal. Nowadays, you find many companies are subject to green tribunals, means any fight against environment. Similarly, water. We cannot adjust water sources like that. So such penalty, not income-less penalty or wealth GST, that is very small in nature. Such penalties are wanted to be known by the stakeholders. Next. Friends, we talk about 4 reports today. CSR, then comes BRR, then of course AR, SR and IR in shortcut. I will just first start with CSR. This is again as per Companies Act, section 135 talks about the CSR responsibility of every company. Subject to some rules, every company has to spend voluntarily, ethically to support the society, engaging its own sources for benefit of the society. It has spent. MCA has mandated the CSR activities of every company. And then they have to. It's the responsibility to spend and to report. Next. Normally, any CSR reports contain what is the amount they have spent, outline of the objective of the expenditure, head-wise, classroom-wise, beneficiary-wise, project-wise, or program-wise. Then comes, normally every company will have a committee. The committee will decide how to spend, where to spend. They will have an assessment of all different projects. They spend, they take their balance sheet, 3 years balance sheet, 2% is the upper limit, and they have to spend it for the purposes. And incidental, they have to report about total amount spent, unspent, if anything is left over, what is the reason, and how it is spent. Here we compare for a while this section 135 schedule, I think schedule 7 deals with the CSR. For a while we compare this with income tax. For my friends who are interested in researchable topics, some of you are interested in research area, we can compare the CSR objectives of company law, schedule I think 7, vis-a-vis with Income Tax Act. Income Tax section 2 in brackets 15, 215 we call in shortcut, deals with charitable purposes. Most of the expenditure in both the heads, schedule 7 of Companies Act and 215 are mostly one and same, mostly. But there are some additions, deletions in both the areas. For a researchable scholar, the best area is to compare the definitions of CSR projects in Income Tax Act section 215 vis-a-vis with the Company Act and make a good study. You take any balance sheet of any company, first rule, they mention the rules, objectives and everything, then compare the figures. You find the expenditure on CSR in any balance sheet or any P&L account, take the thing and compare. And if you're really doing a research, they will also cooperate with you. They will give also certain information. You can analyze, differentiate, and come to a logical conclusion about expense. This is a good piece for my friends who are interested in researchable projects. Otherwise, CSR is a good application on the part of the company. They spend, they report sincerely, honestly. Next. Now, SEBI has mandated all the 500 listed entities in the country based on their market capitalization that they should disclose a list of the practices made by the company to the all stakeholders. Companies, because companies collect much funds, all funds are much from only public. So they go to public. They are obliged to report to the public what they have spent. Next slide, Mr. Shankar. BRP in short form, the framework is every company, industry or products, service, markets, they should give details of the paid up to the company, turnover, profits, CSR spent by them, and what is the initiative they have taken, either at company level or at subsidiary companies. They have got 5 principles of performance. They have to report to the stakeholders as per mandate given by SEBI, all how much they have spent, structure, governance and policies through those 9 principles or Navaratnas. Next slide. These are the principles. They have to clearly lay out on each principle or area how much they have spent. The first one is ethical policy. Every company should have a policy and resolution, make a resolution to the effect in the direct submit. Then how much they have spent for environmental resources. Most important, about which everybody in the country, everybody in the world is much worried, how they have spent. Third thing is employees. How much they have spent for employees, because nowadays we talk about welfare of the employees. How much we have spent for employees, they shall take. Stakeholders. We have got different stakeholders, as I already mentioned, some 8 or 9. In fact, we can add more to the number also. How to reach them, how to map them, how to benefit them. Next, human rights. Nowadays, for everything, we talk about human rights. What the company has done for human rights. Recently, if you recall, it may not be politics to talk about it, but when our person Kulabhushan was detained by Pakistan in by Pakistan people. Our people refer to International Court of Human Rights. So he is safe there. So human rights are most important to not only to do our duty to check our rights. Then what is the company is doing? How does the company address various global environmental issues? It's not confined to one Tamil Nadu, one Andhra, one state, one country. It's a global environmental has to be addressed by the company. Now, is the company is member of any chamber of commerce? Because many chamber, any association will normally take care of the welfare of the chamber members, association members. So indirectly, the company will be helpful to society by serving the chamber. Next, Shankar. Shankar. Shankar.
Yes, sir. Yes, sir.
Yeah. Any problem?
Yeah. I think it's okay now.
Yeah. Now the second thing is the projects undertaken by the company. What are the policies taken up by the company from time to time every day? And they have to talk about the company's projects, what they have taken, to what extent they have come, and what is the progress. And next comes most important, unmeasurable, but important is customer satisfaction. As the company reaches the customer satisfaction, what is it they have done for customer? See, if you see these 9, some are measurable, some are not measurable. But company has to make an effort to ventilate through the report, all the 9 principles and explain to the common public or sector. Now, the most important is sustainability report. It mainly takes care of economic, social, environment. It will not talk much about finances. Annual report is confined to only to finances. But sustainability reports talk about economic situation, the social, again, more particularly health and safety and environment. The approach is a long-term approach. If you see the words of sustainable reporting, it always talks about value. That's all. Nothing beyond that. Nothing less than that also. What is the business strategy? To consider the various operations like ethical, social, environmental, cultural, and economy. What is the aim? The aim is to company sustainability. If company is sustainable, it will help everybody in the society. Similarly, sustainability, what is the company's priorities, policies, and what are the various programs they do for the investors? This is sustainability report. Next, what are the key drivers? These 6 or 7 mentioned here are the key drivers of the sustainable reporting, acts and regulations. First of all, every company has to follow its own country's act and regulation. This is nothing but compliance angle. For example, in India, we should take care of a Companies Act, income tax, GST. There are many acts. Normally, we come across when we go for audit, our general awareness is we are supposed to be in touch with at least 100 acts during our audit. Otherwise, we cannot do audit correctly. PF Act, ESA, Labor Acts. There are many acts in the country. As an auditor, one should be thorough with at least 100 acts to do the audit correctly. Next, customers. As I already told you in BRP, we should focus to the customers, see the customer satisfaction, and through loyalty to society, loyalty to government, loyalty to everybody, loyalty to all the stakeholders. How? Either through NGOs or or through media. Now, employees, the real assets of any company balance sheet is not the figures what we see, not the assets what we find there, like fixed assets or current assets. It is the asset of the company is employees. If you see these statements, there will be any leading country's businessman like Narayana Murthy or Premji, they talk much about only employees. They always say that employees are most important. We retain them. If we lost them, velocity company. That is the priority given to employees. Then every company normally will have its own competitors. Otherwise, it cannot do business. So how my competition? It is the competition. We will look at not mere financial angle. We will look at healthy competition. What other man is doing. For example, take the case of nowadays these media cell phones. Every company is a company with other company, but they are bringing at the end of the day, they are trying to reach the customer with loyalty and satisfaction. They will bring such a product in the competition, in the guise of competition, to meet the requirement of the customer along with affordable price. Now, the last driver is investor, the man who has put money in our company. He should be satisfied by giving him good return of income, good dividend, and everything is taken care. Now, what are the benefits? Sir, the benefits are lifelong benefits. It increases the understanding of the risk. Every company will always have a risk and also with also opportunity. I always call WTO means, you know what is the meaning of WTO? WTO is nothing but world of trading organizations. But I always say that world of threat and opportunity. According to me, WTO means a world of threat and opportunity. I have a risk, how to come out of it. I have an opportunity, how to encash it. This is what exactly we will know this sustainability reporting. Then the emphasizing link between financial and non-financial. I will tell one classic example to you. Suppose my CSR expenditure in the balance sheet has got 6 lakhs, 6 rupees in the P&L account. I will link this 6 lakhs rupees with what I have done. I have made some project for the employees. I recently, everybody is now going for corona victims. They have spent huge amount. I will find a debit in my account expenditure. I will quantify. I will emphasize the link between this expenditure in finance rupees versus with the benefits. To how many people I have reached, who are the beneficiaries, what is the amount I have, what is the action what I have done. This is nothing but emphasizing link between those two things. Then I talk about my long-term strategy and policy. I will not talk about just 1 year or 2 year short term. I talk lifelong strategy of the company, lifelong policies. In fact, if somebody was telling me that this is only subject to verification, don't quote anywhere. I understand Ambani as when he has asked the report of his project. These people have given project for 5 years. He said, I want beyond that. They have made it for 10 years. He said, my project report should contain about 100 years figures. See the vision. He may be earning money, he may be popular, he may be wealthiest person in the world. That's a different story. But normally any project report talks about only 5 years or at the most 10 years. Small feature, near feature. But that particular project report talked about 100 years. Who knows? Nobody will be there 100 years. But the long-term strategy, see the vision of that person. He talked about what happens after 100 years. This should be the vision of any entrepreneur. Then they have to streamline the processes. Process means human element will be very, very less. The responsibility of the mistakes and everything goes in a very, very smooth manner. Now, the most important aspect of the everybody in the country is going is reducing costs. If you see the recent trend in after Corona, many companies in the country are aiming for cost cutting, cost control, not cost control, actually cost cutting. They want to reduce the cost. Best way is to avoid travel. That's what exactly everyone of is doing. Suppose you take the case of this one program. Had this been on a physical platform, it would have costed the organization more than 1 or 2 lakhs. Instead of that, we are doing it virtual platform. Neither I am moving nor we are moving. Everybody is listening some lecture at a very, very cheaper rate. This is a live example for reducing cost. Then benchmarking performance. I will compare myself with other man in the world, or I compare my performance with the last year's performance. Improvement is always good for the healthy running of the company. That's called benchmarking performance. Next, my reputation, which is unmeasurable. My loyalty, my brand value. There are some methods in the operation in the country. How do you value brand value? But all of them, most of them are not scientific, because here reputation, loyalty, brand value, goodwill, they are not measurable like account receivable or KTAs or debtors. there is some element of judgment is there, and it's all depend upon the past performance, present situation, and bright future. So we have to improvise the reputation, loyalty, and brand value. Then comes, I am by producing something. I feel I have produced, I have sold, I have made money, but in the process I am wasting, I am spoiling, or I am degrading my own environmental matters. I will improve, I will incur more on environmental expenditure, and I will negativate. So now this report says me how to mitigate the environment what I have lost. For example, live example, I tell afterwards ITC case. That comes we as um, the role of professionals. Here I am aiming at the my colleagues, child accountants, cost accountants, and any such professional. What is the role of sustainable reporting in SPM? SPM means sustainability project management. How do you manage your project in such a way it is sustainable? It may be inappropriate here, but normally in many traditional families, if a child is born, the elders will give a blessing. The blessing says that suppose a girl is born, they congratulate the parents and they said, their parents, you have become Kanya Data. This means the girl will be after 20 years will be handed over to a handsome boy or good boy. This means this blessing is for more than 20 years. Similarly, any vision of SPM should be a long range, long view. One should take a holistic view of the performance of the company. Then, what is the value of the sustainability? Demonstrate the value of sustainability. What are the new valuations? And what is the risk you are having? How to mitigate it? How to come out of the model, the scale model? Then contact with the sustainability expert. There are many experts in the country who will tell how far we can succeed. They're experts. Contact them and use them, find them with consistent methods. The methods adopted by you should be consistent to go the ultimate goal of the sustainability. And in all this, it all involves the ultimately financial impact. What is the impact of financials on sustainability report? Then comes your own knowledge through systems and processes. Next. Now, these are the recommendations made by SIMA. SIMA is world leading organization of management accountants. It says that you should have first a strategic issue. Any issue should be strategized properly. Then comes business performance. What is the performance of the business? Then you have to take a robust, nowadays we are always talking about robust in everything, whether it is human intelligence or artificial intelligence, anything we always talk about robust, thanks to computation and artificial intelligence. You have to make such a robust, sustainable report that make it strategic, not tactical, not a static one. It should be dynamic, that strategy, and apply with a financial mindset. Don't have normally we say that any business, recently the example of the report of Coffee Day Siddhartha has come, not to public, but the over ambitiousness of the entrepreneur to expand without proper financial support, rather diversion of funds, diversion of I am to spend for one purpose, but I will spend for other purpose, with a view that I will make quick bucks, more money immediately. So to avoid all things, one should have a prudent, judicious financial mindset. Then comes right matrices, and those should be applied consistently, not just trial and error or just say this should be very, very consistent. Then you have to collect data very, very properly, improve the process of data collection, analyze very properly, then report. Then integrate the entire business planning with and report to the stakeholders. This is about sustainable report. Next comes IR in shortcut or integrated reporting. How does this differ from IR? I will tell afterwards. This is again the latest situation in the reporting world. How to report and what to report. Strategy of the company. What are the objectives, performance, risks and incentives. There will be risk, there will be also incentive. And what is the source of the value creation. These four are reported. Why? To contribute to long-term value of the company. Where? Society. Means if you take reverse manner, society, a company should report long-term value. They don't talk, say, figures or anything. They say value, long-term value. Keeping these four objectives into account. Next. Now, this is the umbrella of integrated reporting. I will report their financial statements, nothing but part of annual reports. I will tell the insightful idea of the management, what management think, or nothing but chairman's report, which talks about future and yesterday, future and tomorrow. Then what are the various governance reports? For example, in India, we talk about SEBI, we talk about corporate CSR, those are governance reports. Next comes the issues which impacts the society, environmental and social. These are the things we will. Next is disclosure. What corporate communication? Every company, every corporate has got its obligation to report, to communicate to the society. This is a brief about umbrella. Why IR? You find three different paras here. High quality of financial reporting with standards. Every company in the country is supposed to maintain reporting of finances only through standards. We got 30 standards. We follow as member of the institute. We follow as the auditor. Every company has to follow them. But with all with these standards, which are very good in nature, we are number 2 in the world with reference to following of the standards. Our CA Institute, our CM Institute will take care of utmost care in ensuring that member follows the standards. We are no exception. We follow them. CM Institute has issued also standards for cost reduction, and we are now issuing internal accounting standards, internal IT standards. They are good, but unfortunately, these statements are insufficient. Why? Because they don't talk about value of the company. Now, the complying reasons is only to evaluate to investors on financial performance only. I want sales, profit, expenditure, less expenditure, more expenditure, ROI ratio, debt equity ratio. They are good, but they talk about only the financials of the company, not beyond that. And the non-financial information is lacking. If you, some of you must be teaching auditing. We talk 3 V's in auditing. I am referring accounts as well as auditing teachers here. Validation, verification, watching. Watching is the essence of audit. Verification, we physically verify them and we value them. But the 4th important V, which is missing in all these 3, is value. So I say that 3 V's of auditing plus 4th V of value, not valuation. Valuation always there in the 3rd V. The 4th value is nothing but, according to me, IR. Next, Mr. Shankar. Shankarji, next. Now, what is the background? IIRC is the council taking care of IR in the world. Integrated report. The objective is there. Purpose and uses are also is there. It is a principle-based approach to the reporting system. It has got a format. It connects everybody for everybody. It talks of relationship with the other information. One information is connected with the other information. I will explain you afterwards. then the framework has to be applied. That is the responsibility of the entire integrated report as per IICR. Next question. Now, see again the three words, value creation. It talks always about IR means you can say only, remember one word, value, value, value. Value of what? Capitals. They are given 6 capitals. We will discuss afterwards. The value of the 6 capitals should be there, and it is nothing but, in simple words, value creation process. Not beyond that, not less than that. Next. Here, see, value created for the organization. The organization is creating value through activities, through responsibilities, through interactions, through its activities, responsibilities, actions, to whom? For others. Others are nothing but stakeholders. Now, according to IR, we got, these are the capitals: natural, social relationship, human, intellectual, manufactured, financial. In AR, we talk about only financial aspects. The rest 5: manufactured, intellectual, human, social and relationship, natural, are disclosed or reported in IR. Next. This is the cycle. This is the cycle drawn from IIRC. This is how value is created. See, we have got 6 capitals: financial, manufacturing, intellectual, human, social reliability, natural. Everything, first thing we induce, we input. The input turns into activities. Activities will give us output. Output will give us outcome. Simply nothing but what you have invested in financial, what is input, what is that you have done, activities, what is the output. It is not same output. Output means only a measurable one. What is the outcome? Through mission and vision. Take all these opportunities, have a strategy, allocate all this very, very carefully, perform, and outlook. This is the cycle. This is what the external environment wants. As an inside man, we are interested only in finances or to limited extent. But the external environment wants all these creations. What is the 6 capitals? How much you have made input? What is the activity you have done? And output and customer. This is the value given to the others over different time. Next, Mr. Now, the guiding principles. The guiding principles is we should have a strategic focus, keeping the future into orientation, golden future, lovable future. We should connect the information. We, in these guidelines, will say that the information collected from one source of the capital will be connected with the other information. Normally, we have more information that has to be registered to data. Data is to the input, output, and how to reach the stakeholders' responsibility. Means I will connect the information about the collect through various stakeholders materially. Materially means most important. Actually, in finances reporting, materiality is a different concept. We compare only finance with finances. For example, for 10 rupees turnover, 1 rupee is definitely material. But 100 lakhs of turnover, 1 rupee is immaterial or insignificant. That's the material concept there. Here it slightly differs from the situation. Conciseness. If you have to be very, very brief, then most important is reliability and complete. For that, in fact, complete is the most important principle of in any audit. If I say that I got a balance of cash, 1 lakh cash in my hand, that means it means that 1 lakh rupees is only there, not less than 1 lakh, not beyond that, not more than that, not less than that. The entire 1 lakh only belongs to me only. The 1 lakh is on that day. See, these are called principles of assertions in audit. In audit, we always say that anything reported in the report with any report, you take any report, it means it is there, it is mine, ownership, it's physically counted, verification, it is valued, valuation, it is complete. They are called principles of assertion in auditing aspect. They should be reliable, and naturally there should be consistency and there should be comparability. If these two are not there, any report is waste or useless or does not serve any purpose. Now, this is actually here we look at the stakeholders. Earlier we look at the capitals. Here we look at the stakeholders, say employees, customers, suppliers, business partners, community as a whole, and others. The report boundary should start from risk, opportunity, and outcome, should reach control aspect, influence, then through arrangements, to subsidiaries, through own investments, through whatever the mechanism. I should reach employees, customers, suppliers, then comes partners, then communities, and then others. Next. Now, these are the normal contents of any IR. What is the organizational overview? What is the external environment there in the world? Governance. What is the model that you are adopting? What are the risks you have got? What is the opportunity you have got? You can engage. What is the strategy? How do you resource or allocate your resources? What is the performance? Outlook, that means future. And how do you prepare? Basis of preparation as well as the presentation. This is the definition given by IR. I add one C. They say concise communication from the company. So 3 C's. We should every company which is subject to IR. In India, it is not statutory. It is not compulsory. But some companies have come forward to publish IR. There are 8,000 listed companies in the country, but only 100 and odd are coming with IR reports. But only 25-30 people don't have published the report openly through a form of booklet or online. Company, it is IR is nothing but companies concise communication. Next. Again, this will be repetition. The strategy of the company, governance, performance, prospects. Means it talks about performance, nothing but financial. All other things are unmeasurable or non-monetary. They are always talk about only value. How to define a value? IR, the only aspect is of IR, value. Value should be short term, medium, and long term. It's not like for 1 year in annual reports. It talks about briefly good amount of field in the long term. Next, in colloquial language, we can call next Shankar. Kal aaj aur kal. I should talk about the past. I should talk about the present. I should be able to visualize what is my future. This is briefly nothing but kal aaj aur kal. Next. Yeah. These are the differences between annual reports, SR, and IR. This will be good for my research scholars. You can make good research on these aspects. Annual reports in each area, I have analyzed them content-wise, to whom it aimed, materiality, time horizon, and formats, audit, and at whose instance or at whose direction. We will just take for the annual reports. They talk only numbers and key figures. Investors are the interest they should aim. Finance data is immaterial. I will take finance as a basis. It talks about historical data. It's only number. It is mandatory as per company law, and MCA is undertaking the issue. Coming to SR and IR, they are not mandatory. One is a sustainable report is taken initiative of the global reporting initiatives, and integrated reporting is initiative of IICR. In India, it is not mandatory. They talk about past, present, foreseeable future. And an integrated report goes beyond that. It talks also for future also. The material aspect is not measurable here like financial data, financial reports. But if you think anything impacts, you can put here in materiality. Now, stakeholders at both the levels, though the list is here given, the ultimate person to be reached is only different stakeholders. Most important things. Next. Now, I also compared for our academic purpose the key difference between CSR and SR. CSR means I have told you corporate social responsibility report, vision, targets, business, management, and drive. See, CSR is wherever is applicable is only about it is compliance in nature. If I got so much turnover, I would spend compulsory so much expense. That is what the business report, the CSR says. I will go back. I will report I have spent. I will tend to have my own contribution, and I am subjected to a lot of politicians, groups, pressure, media. I will spend, and it is not to. I don't spend anything to create a reputation. Since it's statute obligation, suppose I build a school, that's all, my job is over. I will not go beyond that in CSR. On substantial report, I look forward, and my value is not one-to-one, from supplier to operation, partners to customer. Though it is about business, it is go beyond my operations, and it is driven to create value, to create opportunity in the emerging markets. Next. Here I have brought different similarities. These three slides are made keeping the requirement of many scholars like you who can go for a researchable topic. Both in SR and IR, you can go for environment. Environment is common in both the issues. No wastage, rainwater harvesting, equal resources, employee management through health and safety. For example, recently, after Corona's epidemic effect, every company is taking care of utmost to spend much amount on health and safety of the employees. Human capital is most important capital. I have to spend much on the healthy and safety measures. That's what both SR and IR talks about employees. Both SR and IR talk about economic concerns. I will tell one classic example of the ITC when the turn comes. Next slide. Then comes economic values, livelihood, generation, regulatory compliances, long-term to watch, human resources. All these are maintained in SR. It also helps for me to do much market survey. Friends, in our country, the best good example is enterprise ITC. ITC is the company. I picked up one ITC for this purpose. It has issued audit report. ABC is A, annual report, B, business report, C, CSR, I, integrated, SSN, ABC is. They have given that I am talking about this all only for 2019 March. See, annual report is given on 13th May 2019. Business report, same day. CSR, same day. Integrated report, June. Sustainability report, June. These are all 19 March only. I'm not talking about 28 March. See how fast they are. It's very difficult to prepare annual report in 2 or 3 months, but they published it. Publishing itself takes more than 15-20 days actually. They published the annual report, they published a business responsibility report, CSR report, integrated report. All of them are printed well before June 2019. It shows that their concern, their commitment, their candid willingness. Now, CSR, if you take the CSR of ITC, they have made a compliance policy well in 2014-15. They have got their own programs, projects, to meet the different sections of the society. IR, they have given a very, very big volume report. Again, those 4 principles: strategy, governance, performance, and prospects. SR, social value creation. SR talks about only value. Environmental regulation issue to the corporate strategy. They have given livelihood to many people. Next. Now, this is financial highlights. well known to every one of you. You find it in the annual report. Nothing much special or nothing much new to know here. Next comes. Next, Mr. Shankarji. Shankarji. Now, see, this is the specialty of ITC. They have taken all the 9 principles of BRR, Business Responsibility Reporting, mandated by SEBI. They are related with the sustainability reporting. They relate the expenditure-wise, item-wise, activity-wise of business report principles to the sustainability report. This is the good part of the situation. All the 9 principles BPR are, it's difficult to give 2 reports they're given. They've gone beyond that. They've synchronized the reports, which activity of their relates to here. All the 9 activities of the BPR, BRP are very much available in sustainability report. This is a good area for my friends for doing research. You take one area of, say, BRR, I'm sorry, compare with SR, come to alignment. This is, okay, next. Only 4 or 5, I find a question here, only 4 or 5 slides are there. Now, this is a brief report about the CSR. See, they have reached every nook and corner of the country. They have done many projects, appreciated, leave appreciation, which impacts, which they have gone to livelihood of every common man in the country. They met all the requirements of the company as a social being, has met the obligation of all the human beings of the country. This is CSR. Next. This is the value creation model of ITC. They have taken all the 7 capitals: natural, relationship, social, human, intellectual, manufacturing, and financial. You may not be able to read them, but I will just tell one story to you. They have correlated what is the amount they have put there in the system, and what is the value they have created with that input. I have told you earlier: input, activity, output, and outcome. All these 6 or 7 indicate how much they have, at the end of the day, have given value to the society. Next. This is the triple bottom line approach of the ITC company. Nothing but SR, sustainability reporting. The figures are not visible to you, I know, but they have given employment to 6 million of the labor. They have made solid waste recycling, waterproof, water preserve, and water positive, and carbon positive. All these are excellent. I will tell one classic example to you. They invented an injection. If the injection is given to a tree grows beyond normal growth lengthwise. It also have a big stem. Suppose they have used 100 acres of land for their paper product as a raw material. Immediately before that, they will go for 100 by 100, 200 acres of land. They plant trees. They will see that the last what they have given to they made society by using 100 acres of land is taken care with the 200 acres. That's how ITC acts. The sustainability report, they take anything, whether it's corporate positive, corporate or water. Similarly, water, they won't waste. You find very interesting aspect in very big hotels like ITC Kakatiya in Hyderabad. They don't waste even single drop of water. It will be recycled. Next. Yeah. This is the successful story of ITC. There are many companies in the country which have got successful story, but I have taken up only this ITC because this is a company which issued all the 5 reports to Reliance has given, Wipro has given, everybody has given, some banks also have given. This ITC has many times bagged awards also from the various people. Now we shortly talk about the internal audit and its impact, its role in the current SR as well as IR. Say integrated reporting is the forward-looking of the internal audit. In internal audit, I will assess the risks, mitigate the risk, talk short, medium, and long term. Next. Earlier, Interlight was taking care of only assets, liabilities, balance sheet, debit, credit. Now, no more. It is the role of assurance to society, assurance to the government, and advisory. He has grown beyond from follower to innovator. Next. Here, this indicates what is the role at follower level, mature level, leader level, and innovator level. The role of Interlight is most important for facilitating to a good sustainable reporting and to get good integrated reporting. Next. This is a very useful slide for all of you, but not able to read. Even I myself not able to read because of the small letters in the print. As a beginner, as an intermediate, as a matured person, as a leader, as a great person. At all 5 stages, I use internal audit. I start, I install, I operate, and I go in such a way. All these meeting 5 steps: beginner, intermediate, mature, leader. I become leader as assurance. I become leader as advisory. I become leader as value provider, and ultimately that leads to the greatness of the Interlight profession. Next. Again, this is also talks briefly about the what is the initial involvement of IA in organization, how to make strategy, how to make risk management, then who are the stakeholders, how to complaints, how to report, how to plan, how to assure you, how to again report, then what are the best practices in the company to be followed, then go for the standards, framework, assurance, reporting, governance. All these are basic pillars of the sustainable reporting. Next, at the end of the day, we should be safe. Safe in the sense, according to me, sustainability accounting for everything. For everything as a businessman, whatever you come across in your life as a business person, for everything you should have a sustainability accounting, that is your minimum duty. Okay? Now, this last slide is earth. Being earth on earth, we owe to earth, we own earth, we owe to earth. So everything is to be accounted for, is to be reported transparently and honestly. Next. Next. Or before that. I thank ITC. CMA, IIRC, Deloitte, P. Moody, from which I have drawn the material. And a big thanks to all of you for hearing me 1 hour 17 minutes continuously, willingly or unwillingly. A big thanks to every one of you. That's all from my side.
Thank you, sir. Now it is the question and answer section. There is one question from Madam Priyanka. She has raised a question: can sustainable report lead to fraudulent reporting? Can sustainable report lead to fraudulent reporting?
If it leads, so the objective is defeated actually. See, we in finances, to get dividends or to get loans, to get smooth assessment in the Department of Income Tax, or to get smooth sailing in the eyes of law, there may be some fraudulent expressions or some diversions or some explanations. But if you do also, it is like in temple, if I go and lie before God, what does God do? God always keeps fight. If I lie before God, that only God only knows. What exactly I meant is, if you really do in frauds and fraud in sustainable reporting, nobody in the earth will save you.
Yes,
that's all
the
from my
next
side.
question is: what are your suggestions for implementing integrated reporting for educational institutions? Many of the participants are from educational institutions.
I know. Your background is from background state. We collect funds from the students, and we vote students rather than parents, whatever it is. At the end of the day, if we impart good education, apart from formal education of the school or college, whatever wherever you belong, if you also impart moral standards to the student. Earlier in our good old days, we were having moral classes in our syllabus. Now I think we don't have such moral classes now in the classrooms or in the syllabus. My personal feeling is, if we go for such classes, communication skills to fight with to compete, similarly all moral values, probably that will, because in school you will use human capital, financial capital, resource, and everything you will imply. So at the end of it, if you reach them, if you make the student as a good civilized boy, not 10 plus 2 or 1 plus 2 or 10, 9 plus 2, whatever it is. At the end of by the time he leaves school, if he becomes a good civilized boy, I think that is the end of, that is the ultimate report according to me, with nothing but integrity report. That's all from my side.
Next question is raised. Yes, sir. Thank you, sir. The next question is raised by Dr. Sutip. His question is that to what extent an internal auditor can maintain the ethics of auditing?
Madam, actually, internal auditor is the extended hand of the management. Management is already busy with its own vision or mission. It cannot do all things on its own. So they will employ internal auditor as a agent. So this internal auditor should be honest enough. If you see the latest case of Siddhartha's, that coffee day guy, you know what did they say? They said that the dog that should have barked has not barked. The wording is the dog that should have barked has not barked. Means there is no timely advice to the entrepreneurs. Every internal auditor should be able to advise the management properly. And from management side, normally management with all that, they listen. Listen means only hearsay, but they don't implement. Had the internal auditor sessions are implemented rightly by the management, definitely IA has got good role to facilitate honesty or whatever the ultimate of the management.
Thank you,
Again,
sir.
personal ethics of the auditors as well as also management. I also equally involve management in the process, not just auditor. Normal auditors will report correctly, but management sometimes will not hear for various reasons. So management does not listen that where is the utility of our auditor's report. It's gone to library only. It will be useful for you as a researcher, but not for the management.
Thank you, sir. It's time to propose a vote of thanks. I thank the resource person for his excellent, elaborate, and informative deliberation. My special thanks are due to you, sir, for your nice, colorful, creative PowerPoint presentation. I really acknowledge your efforts in the preparation of PowerPoints. I thank Mr. Rakesh for his kind support and coordination. I thank all my dear participants for their support to the program. Thank you, one and all. Thank you.
So a big thanks to all of you. Sorry, I have crossed the limits, but I have no other option. I thought I should reach you what I know little bit about the subject. Hence, I am little bit. I know I crossed the limit, but I have gone for around 70 slides are there. Okay then.
Sure, thank you, sir. Participants will meet tomorrow. We'll meet tomorrow again at 11 o'clock. Thank you so much.